Good afternoon, everyone, and thank you for joining us in today's Winning in Life After College webcast. The very important topic that we are going to be talking about today is how to create a budget and all about salary negotiations. We are very grateful for our two alumni speakers who have joined us today for this important discussion. But before we get to them, my name is Mamta Chaudhry, and in my role as Director of Early Engagement, I bring resources, connections, and networking opportunities to our students and our alumni. So please reach out anytime that I may be able to help you connect with any resource that you're looking for. Also, a lot of you submitted questions during the registration. Thank you for that. We have them with us, and we'll try to get through as many as we can. If you did not submit a question but have something now, or if something pops up as you are listening to our speakers, please use the Q&A tab at the bottom of your screen to send us that question. And again, we'll try our best to get through as many as we can in today's 1-hour webcast. So now I will hand over to my wonderful colleague and our moderator for today's hour, Yulia Dennis. Yulia?
Thank you so much, Mamta, for that introduction. Welcome everyone to the Budget and Salary Negotiation webcast. Really excited to be here. And Mamta, thank you for coordinating the Winning in Life series. Excited to be part of this as a moderator. And Isabel, thank you for coordinating the back end of things. And I want to introduce myself very quickly. I'm Yulia Dennis, and I oversee our alumni career services, and I'm here to help you with your career and jobs, etc. Anything that you need as far as your career development. And I'm really thrilled to have our two wonderful alumni career ambassadors and speakers, Blake and Sean. And I'll turn it over first to Blake to introduce himself.
Yeah, thank you, Yulia. Looks like my video is still disabled, so there we go. Perfect. Thank you. All right. Well, thanks, everybody. Yeah, just a brief introduction. Been in the financial services industry for about 8, almost 9 years, and all of which with New York Life, and that's been primarily in the personal financial planning space, and have specialized in working in the young professional, young family market for the majority of that time. But nowadays I actually lead a team that encompasses the entire, well, all demographics, we'll say, in different life stages for clientele. And class of 2014 from the College of Business, and so happy to be here, and always happy to give back.
Wonderful, thank you, Blake. And then we'll have Sean also introduce himself next.
Good afternoon, everyone. This is Sean Gordon here in Seattle. Finance degree, graduated in 2013. I'm currently living up in Seattle, Washington, and enjoying everything up here. I work at Homebridge Financial Services as a residential mortgage loan originator, and I'm also part of the Oregon State Alumni Association Board of Directors. And it's been a great learning experience, and I'm glad to be a part of this and happy to help share some ideas that I've kind of come across. Been up here for about, I think, 8 years now, and yeah, happy to be here. So thanks for having me.
Wonderful. Thank you, Sean. Thank you, Blake. And to get us started, we're going to do some poll questions. I'm going to pull those up and go ahead and answer the questions. And there's going to be a series of them. And this just helps us to get to know you. And I'll be reading off the responses as they're. So the first one is, have you ever created a budget? And we'd love to know if you've done one before. And go ahead and put the responses in. Okay, they're coming in. And it looks like most people, about 85% have done one and 15% have not. That's great. Well, for the 15 that haven't, we will definitely go over the steps. And then we'll do the next question here, which is, have you ever negotiated your salary or pay? So let us know if you've done that. All right, coming in. And about 74%, 75 have not, and about 26, 25 have. Fantastic. So that means way more people to learn how to do it, and it's very common. So now it looks like 67% or so haven't. And so great to know that, and we will teach you how to do that. And so end that question, we'll do the third question. The third question is, have you ever done a large purchase by yourself? Let's go ahead and respond to that. And it's about 70-30. So 70 have done it and 30 have not. So we'll talk a little bit about that, large purchases and what that means for our budgets. The next one is about loans. Have you ever gone through the process of qualifying for a loan? All right, they're jumping across the board. And again, we're looking at about 70% have and 30% have not. So that seems to be a very consistent mix here for the poll questions. And our very last one is, how comfortable and knowledgeable are you about personal finance? 1 being not comfortable and 10 being highly comfortable. And I'll give a few seconds for that to come through. It seems to be the most common one is about a 7, 5, 4, 6, 7, 8. So we have a pretty middle of the range, which I think is great, with most people being at least somewhat comfortable. That's excellent. Well, thank you everyone for answering the poll questions. And then we're going to jump right into budget. So Blake's going to give us some information of budgets and then give us a step-by-step process. I'll turn it over to Blake.
Awesome. Well, thanks, Yulia. Again, so happy to be here. So as most of you probably heard in my introduction, you know, some good experience working in this space in regards to budgeting. And, you know, these poll questions are actually, the first one was kind of surprising to me. 85% of you on here said, yes, you know, you've done a budget. So that's awesome. That's not my experience in working with clientele. So, you know, kudos to those on the call. But having done one versus maintaining one is a whole nother story. So we'll get into that. But so hopefully, you know, these details I'm going to share today are just kind of a step further in the right direction. So kudos to many of you out there. So as mentioned, right, a large majority actually that I've experienced in my career do not actively keep a budget, and for that matter, maintain one. So we're going to touch on those, kind of the why behind that. But what I will say is that those who really do consistently keep a budget are so much more proactive and aware of their financial situation, and for that reason are considerably less stressed. So that's kind of what's at stake. So let's keep that in mind as we proceed. So starting off here, right, looking at spending versus saving, really what's your mentality and what's your relationship with money? It's a very interesting question and something that I have learned not to take for granted. Many people think about this differently. So ask yourself, right, how do I think about my relationship with money? Do I prefer spending money or do I prefer saving it? About 10% of the population prefers to save over spend, and about 90% of the population prefers to spend versus save. So just some interesting facts there. And also, you know, that relationship that you have with money in your personal finances, is it a anxious and fearful relationship, or is it a confident and in control relationship? All things to be thinking about and maybe assessing. Also, right, take the time to embrace that relationship and understand how you can best execute on the strategy that you're looking to implement. All very important steps. And then, of course, right, monitor your progress and consistently monitor it. Those are all some of the things related to this first topic of spending versus saving. What's your mentality? So with that in mind, the importance of a budget is really being able to monitor that progress. And that is a very important step from just creating one versus monitoring and maintaining one. And another topic for today to keep in mind is, what are those big savings goals that you have? Because usually budgeting is directly in line with saving money. And we know that's challenging for many people. And again, something I've observed over the years. Important to add to that savings goal concept is the timeline associated with it. There's a saying out there, right? Dreams are goals with a deadline. So dream big, right? What are you working towards, and have you kind of spoken that into existence? Do you tell people about those things? And then finally, as we kind of prepare for the strategies and tactics, right? If you're worried about these things, seek guidance and ask for outside opinions. That could be a financial professional. That could be just a trusted resource in your network, a mentor, a family member, a significant other. Seek guidance and ask for outside opinions so that you can feel a little more grounded in those conversations. Okay, we can go ahead and move forward to the next slide. So first off, when we're building a budget, one of the things that I consistently see and advise others on is know your numbers and embrace the reality. Sometimes they don't look as nice as we want them to. So when I say know your numbers, some details here that all of you can make note of is, where would you find this information? So the first place to look, and really an important step, is look at your pay stub. And maybe have a quick 20, 30-minute meeting, if that, with your HR professional at your workplace, and understand things like your benefits. And when it comes out of your check, just making sure that you understand what those benefits are, what you're paying for, and make note of at least the monthly costs associated with those, or the contributions that you're making. So once you know the resources associated with what comes in on a monthly basis, then you can move towards looking at spending summaries. So banks nowadays and credit unions have some amazing tools out there on their sites, or when you log in either on your phone or a device. There's a lot of great ways to monitor how you're spending on a regular basis. And each platform is a little different, but there are some amazing tools out there nowadays. So look for those resources, and many of them, if not all of them, are free with that financial institution. Then, of course, the elephant in the room are spending summaries, which can be very easily seen on an annual statement for either your credit card or whatever it is that you have, as far as a spending vehicle. I know for me, in terms of a business planning perspective, I get those annual statements each year, and I break down different categories and use that from a business planning perspective. But it's also a great place to find and evaluate how you're spending on an annual basis for your household. So moving forward, useful apps out there, Mint and many others, can be a great place to know your numbers and monitor those things. So once you kind of know what's going on, then you start to look at things like debt management and really evaluating the interest rates associated with the various debt accounts that are in place. The lower the interest rate, obviously the less considerable that might be in terms of your timeline. The higher interest rate accounts, definitely want to pay close attention to those. And that's where seeking guidance from a professional can really help prioritize the different strategies there. Now, consider savings goals as a way to pay yourself first. Right? We're always thinking about all the bills and the things that we have in our life that always seem to take priority, but are you paying yourself first? And having a budget will allow you to confidently do that and allocate what you want to set aside and then pay everybody else later. And obviously you need to use discretion there, but it's a great mindset to be in. Am I paying myself first? That's what everybody does out of their 401k or other employer-sponsored plans. Why can't you do that in your own financial life as well? And then, as I mentioned earlier, evaluate your strengths and your weaknesses and your own mindset going into these things. Once you know those strengths and weaknesses, you might consider how you structure your budget and making sure that you're speaking your own language. Okay, we can move on. So lastly, now execution. This is something that I, again, have shared with hundreds of clients from a budgeting conversation, is this idea of net income minus my expenses equals free cash flow. on a monthly basis, how much free cash flow should I have? And then it's my decision whether or not I spend that money or save that money. So now as we look at actually structuring that budget, again, as I mentioned, start with your income and evaluate, do I have one income source or multiple income sources? Maybe you're single and have multiple income sources. Maybe you have a second contributor in the household. Maybe you don't. And you want to really break down the different sources and the dollar amount coming in. Then we move to expenses, and I recommend breaking down fixed versus variable expenses. Fixed expenses are things on auto draft, the things that we don't really have to think about, but we know we have to pay. Variable expenses are more discretional spending. So dining out, travel, other things, gifts and personal spending. And so if you break down fixed expenses versus variable expenses, it can really put those spending habits in perspective. And as mentioned, right, savings. What are your goals and what are the amounts that you're hoping to save in relation to those goals? And are there multiple savings techniques you're using? And then lastly, right, pay yourself first. So the last thing on the list is look at those debt repayment strategies. Where are your prioritizations and the amounts toward each of those accounts? I highly recommend using a Excel file or a Google spreadsheet, your Google Drive, to be able to monitor and regularly update these numbers. And of course, on an update standpoint, depending on how you think about money and that relationship that you have, sometimes people like to update every other week or on a monthly basis if they really want to monitor. Others are more comfortable just looking at it on a quarterly basis. Any and all activity from an update standpoint is excellent because it will keep you on track and keep things real, right? Embrace that reality. And I think we just have one more slide, if I'm not mistaken, as an example of, a 10-step budgeting process. I think a good way to look at this would be to assess strengths and weaknesses along this life cycle. They're going to ebb and flow as time goes on. So maybe start with determining that timeline and the goals and those maybe 12, 1, and 2 o'clock targets. And then again, speak it into existence, discuss it with others, and agree on different budgeting approach and implement things. And then you can see, right, develop, review, adjust, and implement and do it all over again. These are some common areas to focus on. I think with that, Yulia, are we moving to a Q&A session?
Wonderful, thank you. I will have Sean share just a quick, any additional comments that he has, and then we will move to the Q&A section.
Yeah, thank you very much. Blake, that was an awesome overview in the process of it all. I think it's something great that you mentioned was this is always going to be changing and it's always going to be needing updating. Your life changes. So being aware of that and, setting out time to make sure you check in with your budget and updating it as life changes is very important. So that's great. A couple things that I've thought about, make sure you always budget fun money, as I like to call it. You need to have balance with life and with everything else with balance. You need to make sure you're spending some of that money and budgeting some of it so you can go do either, treat yourself by buying something nice for yourself or, someone that you care about. So that's always something I think about when I'm creating my budget. Another big thing is also be creative. As I kind of was mentioning, life's changing all the time. And so sometimes, you think it's going to go this way for the next 5 years, but as things change, make sure you change accordingly. And also you can think about that creatively by asking others. Your current financial advisor is a great initial resource, but if you have other friends that are doing cool things or stuff you hear on the news, reach out and see if it applies to you. And then I think the last thing that, I want to just hit home is just start saving early. It doesn't have to be a lot. It could be something simple as $5 a month. Just because and putting that aside and making sure you have some of that, you'll see great growth in that the sooner you start. And then as you kind of scale your career and everything, you can add more to that. But those are just things that I've kind of learned and I implement myself. So just wanted to add that in. Thanks.
Great, thank you, Sean. Those are also very excellent points. So one question for you, Blake, is what are the actual buckets that, as people are creating that budget, so they have a goal, what are the actual buckets that people should have on their budget? And then how should they maintain that? Do you recommend Excel? Do you recommend some other tool for that?
Yeah, so as far as the tool goes, I think, Excel or a Google spreadsheet, if you're a big Google fan. I personally use, Excel, and every year I'll create a new tab. So, 2018, 2019, 2020, 2021, so I can monitor and look at those. But to Sean's point, things change. And so I think evaluating at this stage in life or wherever you're at currently, what income sources, expenses, and, again, savings techniques, debt repayment, the areas that I've focused on are a great place to start. And what I'll add to that is be detailed, right? So everything from, fuel, insurance, if you're looking at something like your vehicle, right? Do you pay for car washes? So you could break down 3-4 different categories just associated with your vehicles, right? I also highly recommend breaking down groceries versus dining versus entertainment. It's shocking how much money the majority of us are probably saving on a monthly basis because we can't go out to eat or grab a drink with a friend or whatever it might be. The amount of entertainment and dining that's been saved is staggering. So just to wrap up that thought, the more detailed, the better as far as those fixed expenses and those variable expenses are concerned. And so looking at your, checking account statement for the last 3 months and what things are auto drafted and what things are more just a swipe sort of transaction will really allow you to break down categories. And again, fixed versus variable are very important. I hope that answers the question.
Yeah, definitely. Thank you. Excellent. And so in line with those questions too is how much money should people save? What is an appropriate amount to have in something like an emergency fund?
Yeah, so great question. Sean, if you want to jump in and add a comment here after I respond, absolutely. Great to get multiple perspectives. So as far as a proper emergency fund goes, right, what we advise our clients is at least 3 to 6 months of those fixed required expenses. So if, for example, on a monthly basis, mortgage, utilities, car payments, student loan payments, et cetera, all the fixed items, let's say adds up to $3,000 or $4,000 on a monthly basis, at least $10,000 to $20,000 in an emergency fund, cash, ready to go, would be a proper emergency fund. Depending on your lifestyle, that might be a little less or a little more.
Yeah, sorry.
Go ahead, Sean. Go ahead.
I said to piggyback off that, that's what I was going to say. A lot of it's great to have it readily accessible. Like you said, on the mortgage lending side of things, we look at around 6 months kind of as a rule of thumb, and then sometimes other requirements. But, I think you're right. Cash on hand, that's great kind of starting spot. And then also if you have your funds allocated into, the stock market or other place that's easily liquid, that's also something that's great, but you can get a little bit more return on that. So.
Fantastic. Wonderful. And so we will turn it over to Mamta now, who can share some audience questions. Looks like we did get some in.
Yes, thank you, Yulia. And Blake, we have a lot of questions for you. So here they are. And before I fire the first one, just for everybody watching, a copy of this recording and a copy of the PowerPoint slides that we are sharing today, including this 10-step process, will be available on the website that you use to register, which is osualum.com/winning. So in about 2 to 3 days, this entire package will be available to you, just so you know. That was one of the questions. But Blake, here we go. After getting out of debt from high interest credit cards, should you close that account or card?
Oh, wow. Great question. Well, so it depends. And again, this, I have to be careful what I say here in terms of, a certain level of advice, but generally speaking, what I've heard and what I've seen work well is consider the lifespan of the account. And Sean may be able to really add some more input here since he looks at debt on a regular basis. But if you've got an account that's maybe 1 or 2 years in existence, it typically isn't as big of an impact as far as closing it. We'll just say it's an oops. But if you've got an account that's been established for 5, 6, 8, 10, 15 years, adjusting that credit limit but not closing the account is a great strategy so that you can show consistency, and that's how you really build a strong credit score as the years go on. And then depending on, again, that relationship that you have with your spending habits, if you're noticing that those balances keep creeping up and then you have to pay them off and they creep up and pay them off, lower that limit and protect yourself.
I can see Sean nodding with that as well. So thank you.
Yes. Yeah, I think Blake nailed that pretty spot on. I think in terms of a mortgage loan, one thing that we do look at and that does strengthen your profile is the length and longevity of your lines of credit. If you have, like you said, a higher interest credit card and you've paid the balance down, it doesn't necessarily have to be all the way down to a zero balance. Something that we look for in my industry is, if the balance is less than 5% of the whole amount, then that's helpful for improving and strengthening your credit profile. There's multiple factors that go into it, and I think the biggest thing that we look for, and I know that other loan, if you're looking for a personal line of credit as well, is if you're paying it on time and you're staying current. That's more important than opening and closing accounts on credit cards. So to answer that question, if it was mine, I would say get the debt down and pay it down as much as you can, and then keep it open because the longevity strengthens your profile.
Awesome. Thank you. It looks like we have a lot of questions, so we'll try to get through some of the next ones really quickly. Blake, do you recommend that the 50-30-20 rule be applied to gross or to net income?
Interesting. So the 50-30-20 rule, I might need a little clarification from whoever asked that of what they're referencing. It's a little vague. Maybe we can come back to that question if they can respond to the chat with a little more clarification on what the 50-30-20 is referencing. That way I can make a better response. Okay.
Can you speak more about paying yourself first? I like that question. So can you give an example of paying yourself, or how much should that be?
Yeah, absolutely. So this is a concept that, again, we share with our clients. And so this is something I learned years ago. But again, it comes back to that relationship that you have with money and what you're looking to accomplish. So let's say, for instance, you go through this budgeting exercise and you find that you have $1,000 a month that should be left over between income versus expenses. And again, it's your decision to spend it or save it. Well, maybe you set up an auto draft from your checking to your savings account the day or 2 days after your direct deposit gets contributed to that account. So you're immediately funneling, let's say, $150 per paycheck. That'd be $300 per month if you get paid twice per month. You're paying yourself first. The money's out of sight, out of mind. And then you can spend that $700 and you've saved 30% of the $1,000. That's paying yourself first. And then, of course, factoring in where else you're already saving, and then using that towards your collective goal, right? So maybe it's $500 toward my 401k, $300 towards my savings account, and maybe $100 or $200 towards another vehicle that somebody is advising you on, let's say.
Totally. Okay, so we'll do one more before we go back to Yulia, because I know you have some more questions as well. So this one is, Blake, have there been any changes on how mortgage lenders look at borrowers who already have student loans on their accounts? Maybe this is
I'm going to defer to Sean, because that's not my territory.
Yes, great question, Christy. And there have been some changes to it. Kind of how it works when we pull your credit on the mortgage side of things. If the credit report responds with a monthly payment because it's set up and it's reporting, let's say it's $100 a month for a student loan, that is the number that we can use. If it is not reported, there's a couple different ways we can look at it. And that's something where we can take this offline and we can look into this if you'd like. But there are different ways to look at it in terms of either using a percentage of the total balance if it's not reported versus if it's deferred. So there's a couple different ways on that. I won't take up too much time, but we can take this offline if you want a follow-up question on that for sure. But yeah.
Thank you, Sean. And just for our audience, we will try to get through as many questions as we can. But if we don't, you can email Yulia or me, and we can connect you to both our speakers and help where we can. Alternatively, you can also connect with us directly on LinkedIn. Both our speakers' profiles are linked on osualum.com/winning. So they have also kindly and generously offered to connect with anyone who wants to connect with them on LinkedIn and help them sort through some of the questions we may not be able to get through. So don't lose hope. We are trying to keep moving for essence of time, but we still want to make sure you get your answers. So Yulia, over to you.
Thank you. And thank you, Mamta, for keeping an eye on the chat questions. And Blake and Sean, you did great with responding. So just one more question, and then we'll move on to the salary negotiation part, because obviously that's also very, very important. So in our registration, many people asked about saving money, how to save money, how much to save, and what are some strategies for saving money. So I'd love, Blake, if you can address that, and then we'll move on to Sean's section.
Absolutely. So, Yulia, would you mind real quick just repeating the areas of that question?
Yep. So the questions were around strategies for saving money, how to save money, how much when you're not making a lot, and just strategies for saving money, especially in little bits and pieces here and there. Okay, awesome. Yeah, so first thing I would mention in that regard is, and again, a strategy that I've seen work really well and I consistently implement with clientele is baby steps. Going from 0 to 60 is scary and challenging, but taking again, a timeline approach and taking baby steps towards the goals that you have. Again, let's say that you're currently not saving anything consistently. It's kind of a, I save when I can type mentality. Well, starting to save $50 or $100 on a monthly basis is a huge step forward. Then moving from 100 to 200, 200 to 400, 400 to 1,000 type mentality is very healthy, and it doesn't set yourself up for failure. The second thing that I'll add is where a lot of folks make mistakes, and this is something, again, that we really coach on and work with our clients on, is when you increase your income, increase your savings the same way you want to increase your lifestyle. So that's why it's so important to know your numbers, not your percentages. So if you know that you're saving $100 a month towards your 401k and you feel really good about that, well, when you get a huge promotion and your income goes up 30%, did your spending go up 30% as well? And so keeping that relationship healthy is smart to monitor. Are you increasing your savings the same way you're increasing your lifestyle when you do increase your income? Huge topic of controversy, especially with new couples. You go from one income to two, but your expenses don't necessarily go up. Taking the time to think about your savings goals in relation to that are key. And then finally, the last question in regards to amounts. Again, it's going to depend on where you're at currently and what your goals can be. I have clients that save 50% of their income, but don't make six figures. I have clients that make well into the six figures that can't save 10% for the life of them. They really struggle. So evaluate where you're at and what you want those goals to be, and then again seek help from somebody to help advise you in the direction that makes the most sense based on your unique situation. Wonderful. Thank you, Blake. That was really great. Sean, we'll turn it over to you for the salary negotiation part.
Thank you. Yeah, Blake, that was awesome. And just a great refresher on all this. It really made me kind of think that I need to check back in with myself, and I think do it more often. That's something that I can't stress enough. And so I appreciate that. But yeah, as we pivot over to salary negotiation, the main thing I wanted to kind of lead off with this is going to be in two kind of scenarios to think about. So make sure you can apply it to both ways. And so the first one would be if you're currently employed and looking to negotiate a higher salary of what you already are making. And then the other scenario would be is if you're looking for a new job, or it's just starting out your career, and you're on the job hunt and getting a salary or doing salary negotiation that way. So just keep that in mind that this applies to both scenarios. The first thing is it's scary. Negotiating can be scary. It is scary. It's all the above. It's one of those things that gives me anxiety talking about it. But it's one of those things where you have nothing to lose and everything to gain. And the worst case in all of this is you don't get what you request for your negotiation, and you're still at where you're at. The best case is you get the salary negotiated that you want and you get more money and you're happy. And so, at the end of the day, at least you asked, and the seed's planted for the future if they do say no. So don't be worried about it. It's something that everybody feels when they're negotiating. Second part would be to pause before you accept. And this would be kind of more specifically if you're talking on a new job or a new opportunity. Once you've been handed or offered a new position, pause and think about it. First step, always thank them for the offer, express your excitement, express your gratitude. But don't, as I kind of tell everyone, is don't show your cards too quickly. So, and part of it is you want to make sure that you kind of are putting your best foot forward. And it's that the company is excited to bring you on board, and bring you onto the team. I think kind of what I always tell people when I'm talking to them is, let them know that you would like some time to think about it, just so you can take a breath and you don't overthink things and you don't forget about other things, while you're negotiating, to make sure you ask for that, or, follow up to make sure, oh yeah, this is all covered and part of the negotiation that we are talking about. If you're currently employed and looking to negotiate your current salary, the biggest thing is you need to be very upfront, bring the facts with you and explain why you deserve the raise or the increased salary that you're going for. Again, kind of what Blake was saying is know your numbers. You want to make sure you're confident and there's a reason for you asking for this request, and it's just not out of the blue. Sometimes, people think that over time they just deserve an automatic raise, but if your performance doesn't back that up or it doesn't, show that you deserve it, some employers may be less ready to give you that negotiation and the salary increase that you're looking for. So again, make sure you do some research and you prove and you have the facts, because they're going to ask you. That's going to be their first question when you do look to negotiate. And then along the lines of that, once you've done your research and you have your numbers, make sure your request is realistic. You don't want to insult your employer by, expecting a 50% raise when last year, your numbers didn't prove that you were worth that. So again, it's kind of something to be realistic and don't overshoot, or, you may only have one chance to really put your best foot forward. And so you don't want to, mess that up by saying the wrong thing or insulting, like I said, your employer. And then kind of another thing is silence is golden. I apply this to a lot of different facets of life. But when you do ask, again, it's scary, you're nervous, all the above. But, ask for your request for the negotiation and then stop talking. Silence is awkward. Be patient. You don't want to just kind of fill the void and fill the empty or the emptiness by you kind of talking and showing your nerves. Stop talking. Stay in control, by not instantly responding to them, and then make them respond. And even if their response is, hey, we need to bring this back and discuss it a little bit further, at least at that point, it shows that you were thoughtful about the whole process and the negotiation. So next slide, please. So some other things to think about when you're doing negotiation is you can negotiate more than just the salary or your base salary. Think bigger. Consider other benefits or perks or even bonuses that you could be rewarded with. Again, if it's performance-based, or some other things to think about would be a phone or car allowance, more vacation days, relocation reimbursements if you are getting a new opportunity in a new location, or even a home office setup nowadays with everything being remote and people having the flexibility and employers letting people work from home. That could be something where you negotiate some new monitors or a new laptop or a new standing desk if it's something. So think bigger picture and not just the salary. Also, this is also if you have multiple opportunities, or if you're at a place, be willing to say no to a negotiation or conversation or an offer, or walk away if it's not the right fit. You want to make sure you don't feel the pressure if you don't get what you want, or if you find out, this company doesn't value you for who you are. Be okay with that. Again, kind of be patient, think about everything. Take some time to see the whole picture, and make sure you don't just kind of jump on something to jump on it because it's the first thing that came to you. If you're interviewing with multiple companies, you may want to wait till you get the other offers. So that's kind of something to think about and consider. Again, if you ask for a salary increase and they say no, ask about the future and how you could get to the salary that you want to get, and make sure you put a timeline on it. So if it's something where your employer comes back and say, hey, right now is not a great time, respond to them and say, hey, when would be a good time? Could we talk about this or bring this back up in 3 months, 6 months, or in terms of performance, what would I need to do so that I could be eligible for that raise, or could be eligible to get the car allowance or cell phone allowance, those kind of things. And then also along the same lines of that is ask for feedback. If a company comes back and says, hey, sorry, you're not rewarded with the higher salary, ask them, okay, what am I doing so that I don't deserve that? Find out that stuff so that you can figure out a plan. You can set your expectations and make sure that they make sense with kind of what you're doing and if what you want to do with your career, and go from there. And then kind of the last thing that kind of really hit home, I heard this on one of Julia's webinars that she's done in the past, and I think something she posted was, you don't always get what you deserve. A lot of times people don't raise their hand for a raise, and so they're not going to get that if the company doesn't know that they're interested in a raise. Or a lot of times people kind of get caught up with things and they don't change what they're doing just because they're kind of in the flow of everything. But again, you're not going to get it if a company doesn't know that you want a salary, or maybe a company has seen you do great work, but they don't think that, and they haven't thought about giving you a raise. But if you don't ask, then you're not going to get that. But yeah, so always, speak up, find out, get feedback, ask for constructive criticism, figure out ways that you can improve your performance and also the company's everything. And so that's kind of everything that I have. So
That's awesome advice. And yeah, I do love that quote, Sean, as you know, and you don't always get what you deserve or you think you should get, but you get what you ask for, what we have the courage to ask for. And I totally agree. One of the questions that came up, and I think this is pretty relevant for our audiences. Let's say if you're negotiating for your first job after college or for a new field, maybe you don't have as much experience in, what would be your tips for negotiating for that?
Yeah, that's a great question. And I think the main thing would be do some research and figure out, again, first off, say thank you, show your excitement, tell them that you want some time to think about it, and ask them for a timeline. Hey, when do you need to know a response by, especially on the first job? It's super exciting. You're right out of college, or, maybe you're switching careers and all that. You're really excited. But again, tell them, hey, thank you very much. Let me have, till Friday so I can kind of think about it, let it all soak in. Then again, yeah, go out and do some research. So if it's looking on Glassdoor, that's a great resource. You can find other positions or other people with the same title, figure out what they're making, talk to somebody, within the OSU Alumni Association, find someone on LinkedIn or any of us and say, hey, I'm going into this industry. What's kind of an expected starting salary that I could start or I could expect, and do that research so that, hey, this is what is reasonable. And if it's not, if it's either higher or lower, make your decision off of that. But I think that's good to know. Again, know your numbers and figure out where to find that sum.
Awesome. Great. Blake, do you have something to add as well?
Yeah, I think there's another great resource out there, actually, that my wife mentioned to me as I was preparing for this. She's in the HR field. Salary.com. It can couple together nicely with Glassdoor for kind of a different perspective. So I'll add that. The second thing I'll add is don't forget about variable compensation aspects, right? And understanding if you're in a field where there is a performance element, annual bonuses or commission related earnings on top of your salary, you don't know if you don't ask. So there may be room for negotiation there if you feel that you're a top performer and you'd like to share in that revenue that you generate.
Great feedback. All right, we'll turn it to Mamta for some audience questions.
We do have one, and Sean and Blake have also been really nice about trying to answer them live for some of our audience members. This question is for Sean. Is there a good time to ask for a raise when employers are leaving the company and you will be under new management?
Yeah, that is a great question. It is something when there are changes within a company. And again, this is kind of my own personal take on it. Blake and you guys may be able to pitch in. I think it's a great time to have those conversations. Something's changing. There's a reason why some people have sought other opportunities and maybe have left. And so I think you do have some power there in the ability to really ask, talk to management, say, hey, this is happening. This is what's going on. I think this would be a great time to, talk about the future of myself in this company. And, again, the biggest thing is make sure you have your numbers and you have proof and, performance to back up if you are asking for a raise. Some companies they're already obviously going under a lot of other things if people are leaving. And so they want to keep the talent that they have rather than, kind of start fresh. So it is something where you have some leverage, but that's kind of my take on it.
Thank you. That makes sense. Yulia, that's all the live audience question I have for now.
Okay, thank you, Mamta. A few other questions that came up through the registration form, and I'm gonna lump them into one question, and I'll actually have both of you answer, but Sean, I'll have you answer first. It was about mortgages and refinances, and obviously different people watching this webinar are going to be in different stages. But as far as buying a house and refinancing, what are some tips that you have for our audience, even let's say if they're just thinking far ahead into the future when they might be interested?
Yeah, totally. Currently, right now, refinancing is a great option. There's a lot of things to think about. The interest rate on mortgages are awesome. They've been held low for the last 6, 8, 10, last year, let's say. And moving forward, they've predicted to keep them low. Again, don't hold me to that. But currently, the predictions that interest rates will stay low. So if you have a mortgage right now, definitely reach out. I'd love to chat with anybody or any of your mortgage professionals to get a quote. There's no harm in that. It doesn't hurt you by any chance to at least know what your options are. And another big thing that I'd like to promote and tell people to think about is kind of something Blake initially talked about, and that was the debt management. Right now, with interest rates being low, you need to think about what your interest rates are on let's say your debts for your credit card or maybe student loans. Those rates may be a lot higher than what a current mortgage rate is for a refinance. And so something to think about would be looping those things in, bringing in your student debt and, lumping it into your mortgage and doing a refinance that way to cash out some funds and pay that off at a lower interest rate. And then in terms of the pre-approval, I'll try and wrap this up, but start early, have a conversation. Again, there's no fee to get pre-approved. Talk to your professional. Great people like myself are to talk to them and learn what you qualify for first, and then talk to a financial planner and ask them, how can I save the money up so that I can use that money for a down payment and kind of strategies that way. But yeah.
Yeah, so I agree with everything that Sean shared. I think too, it's to his point of using equity or any sort of accumulation that you have seen in a property, it's a fine line to walk. But interest rates are the main driver in that decision. If you have a large or a higher interest account that is seemingly just unavoidable and very challenging to repay, a lump sum of cash oftentimes is a great way to accomplish that goal. And I think working with a professional to help you prioritize which items you can slowly repay and others that would be better to pay off in a large lump sum, multiple perspectives can help you make a good decision on that. So the mortgage lender, the advisor, an accountant, et cetera, to really make sure that you're making a good decision. The second thing I'll mention is save the money that you spent or that you're going to save in that process. So hold yourself accountable to continuing to put away what you would have been spending otherwise. Huge step forward and can really make a big dent in those savings goals. and make the most of that refinance.
Wonderful. Thank you so much both for that great advice. And we are ready now for our summary statements. And Blake, I'll have you do your key takeaways that you wish for the audience to know, and then we'll have Sean do his.
Yeah, so I don't have anything specific prepared, but what I do have are these some of these poll questions. You know, a very small percentage, or definitely not the majority of the audience has ever negotiated a salary. I wonder how much of that is just because you didn't ask. So, you know, encourage everybody to take that seriously. You know, 70% of you said that you have made a large purchase. How many more large purchases are you going to make? And preparing yourself to make more informed decisions is a great way to not repeat mistakes that you might have made in the past. And then, you know, loan qualification, again, the majority of you have gone through that process. With interest rates being so manageable, and if you do have a long-term time horizon, you know, 10, 12, 15, 20 years or longer before, you know, retirement or whatever the case might be, which I assume the majority of our audience is in that situation, leverage is an amazing thing if you can use it to your advantage, especially when interest rates are low. So don't be afraid of that relationship with debt. And then last thing I'll say is cash flow is so critical. And understanding what that amount of free cash flow on a monthly basis should be versus what reality is currently can be an unbelievable motivator to start to reassess and think about goals and where you prioritize things. I think I'll probably wrap it up with that.
That's great. Thanks, Blake. Yeah, a couple big things for me would be curious and ask questions. I don't think that can be said enough. You know, ask a professional like Blake or myself if you have questions on any of this stuff. Ask your friends, ask your family, ask your boss. You know, those are all things, you know, in terms of negotiating, all that. Be curious because you'll never know the answer unless you ask. And a lot of times people are too afraid to ask. And so it's a great starting point. And then also, yeah, I think getting, you know, a second opinion. People always want to help. So just reaching out to anybody and really asking them for their opinion, you know, one or two people is great. So you can kind of bounce it off and make your own decision. You know, Blake's opinion for one thing is different than mine. You know, there will be some overlap, but there are different opinions, and then use both of our answers and make your own decisions based off of that. And then I think the last big thing would be, yeah, when you're looking to do, you know, like a big purchase or any of that, you know, talk to someone that's done it before. And really, you're not alone. I know it is kind of, like I said initially, it can be scary, but at the same time, there's professionals and the people that do it daily, so that they're ones to help you with that. And again, you know, people are willing to help, so be willing to extend a hand.
Really great advice. I love that. And for those of you who need help with salary negotiations, come talk to me. Glad to help you with that. We have other webinars that are specifically on salary negotiations. I think we had some really great content. Thank you, Blake and Sean. I'm going to turn over to Mamta, our wonderful moderator and the person who leads the Winning in Life series, for the conclusion.
Thank you. Well, Sean, Blake, this was an hour packed with so much of valuable information. And from the question and answers, we know that it was very helpful to a lot of the attendees. So thank you for being such passionate alumni and for continuing to work with us to help fellow alumni and students. Deeply appreciated. Yulia, thank you for your partnership in today's event. This was amazing. And it has been great to bring this topic to our audience. Everybody, as I mentioned before, this is our webpage for winning. This is our wrap up for our winter Winning in Life series, but we will be back in spring. And in the meantime, don't forget to look at the recordings because all the topics so far have been amazing, and there's so much to learn from each other. So I hope you'll be able to go to this page and watch some of the recordings. And if you have any questions or want to connect with any of our alumni speakers that you see in any session, please send me an email. And all of these alumni are very eagerly waiting to help you in any way they can. Thank you, everybody, and have a wonderful rest of your week.